Now, the FGN bond yields inched up by 6 basis points as investors reacted to the 100 basis point rate hike by the Monetary Policy Committee of the Central Bank of Nigeria. Chuka Nwachukwu, head of fixed income trading at UBA, joins me for a midweek market update. Chuka, thank you so much. It's a pleasure to have you on the show today.
Thank you, Esther.
Well, looks like I'll just have you on this camera instead. All right, let's just, of course, take your reaction to, oh, there you are. Let's get your reaction to the rate hike yesterday. 100 basis points, was that what the market was expecting?
Yeah, market was actually expecting between 50 to 100 basis points, and it happened that it came out at 100 basis points. And this has actually, affected trading shortly after the announcement. And then today as well, we've seen rates move as high as 50 to 70 basis points. And, we've seen yield actually, move at between 50 to 70 basis points. And this will continue, going forward.
When you say this will continue going forward, I'm just remembering comments made by the CBN governor when he said that if inflationary pressures continue, we should expect, more rate hikes. How is the market processing that and factoring that into trading?
Yeah, market is actually, over some couple of weeks, this rate hike has been anticipated. And so the last MPC, it was moved by 150 basis points. Market reacted slightly, but we knew that more increment was coming. And so market has also reacted positively on this announcement, this 100 basis point movement announcement. And so we feel that as long as the inflation continues to go up, the inflation figure came out at 18.6, and that was about 92 basis point movement from 17 levels. So we expect this to continue going forward.
I know that obviously good news, well received by investors, but I mean, if you look at the rates, where inflation are and where rates are, both on the long and the short, mid, and long end of the curve, we're still in negative return for investors. And I know investors are particular about the 90-day instrument in terms of wanting to see higher rates. But we also do know that the U.S. is set for another big rate hike. I mean, what are you discussing amongst yourselves, traders, in terms of how this could also impact our market?
Yeah, U.S. Fed has actually given the further guidance, which means that they're going to increase rate, like you rightly mentioned. Amongst traders, you already know that this will affect our market, especially with the inflation figure going up. And so we find that, we see that a lot of people are also very skeptical about taking a position. As a trader, if your market isn't too, if you're not too sure of the market, you just want to be on the stand on the fence, and that's what we are doing presently, because we know that as long as inflation keep going up, and mind you, this inflation is not just on the African continent or Nigeria in particular. All over the world, inflation figures are going up. For a very long time, we saw inflation figure go as high as 7 to 9% levels, in the European market, and this has actually has been triggered, as a result of Russian-Ukrainian war, and as well as the high cost in oil and of course gas as well in the European section of the market.
One last point on that. How do you see these events shaping trading for the rest half of the year? We know the rate will go up. We don't know for how long they will go up. I mean, these events are still developing, especially with the effects of the Ukraine-Russia war and the U.S. Fed. The ECB is expected to meet on Thursday this week to also raise rates. But what do you foresee the second half of this year looking like?
It's looking more like an upward trend, especially with the liquidity situation in the system. Before this rate hike, last week we saw rate move up on the T-bill side between 9 to 11.5%. So as long as we see liquidity constraint in the market, there will be that bearish sentiment, and once the bearish sentiment, people will continue to to take position. People will continue to sell down their position in order to create liquidity, and that's what we are going to see, going into the end of the year.
Now let's quickly talk about the Naira. of course, FX situation hasn't really improved much, but the CBN did have some comments about that. He talked about the race to 200 billion, $600 million raked in so far. But we know there's still pressure, because I was talking to the head of the BDCs today, and he talked about, and he said that the new importers who usually didn't even come to the market are now coming to the parallel market to source for FX. Just bring us up to speed where the Naira is at the NAFEX window, and your thoughts on the CBN's comments and the money being exchanged between the importers and the exporters, and if that initiative is having any effect at all.
Okay, I mean, the Naira has slightly depreciated, not slightly, I mean, between 1 to 5 Naira depreciation we've seen at the I&E window. Also, this has effects on the parallel market. And then, of course, I mean, normal thing, once demand outweighs supply, the prices will go up, and that's exactly what we are seeing. A couple of weeks ago, or months now, CBN made an announcement that banks will be funding their FX transaction towards the end of the year. So that also has put pressure on the on that side of the market, and then you see a situation whereby people are actually panic buying because I mean, I can't say 100% for sure that some of these demand we see in the market are just strictly normal demand. People probably just panic buying and then holding the commodity, and then that will obviously affect the price.
All right, we have just 1 minute left. What is your forecast for trading for the rest of the week at the different market segments?
Yeah, so for the rest of the week on the T-bill market, we continue to see bearish sentiment, sell-off, especially on the shorter end of the curve. So this will continue. Also on the bond side, we see people trying to exit. Yesterday, there was a bond auction where about 225 billion was on offer, and then the significant thing about it is that we had about 135 that was sold, which means that the appetite on that section of the market wasn't really there. It could be as a result of the fact that people were also looking to see the outcome of the MPC, so nobody really wanted to go aggressively at the auction. And so for the bond side, going into the rest of the week, we still see bearish sentiment. We see people trying to sell off their position and at the same time to create liquidity as well.
All right.